This episode of Back to the Roots podcast is brought to you by Mercaris. As you plan for next year, you'll need accurate and reliable pricing data for your organic and non-GMO crops. Mercaris has free resources exclusively for growers. Mercaris produces the most comprehensive suite of pricing data and market intelligence available for the organic and non-GMO industry. Make the best business decisions with Mercaris' pricing reports, delivered directly to you for free. Visit mercaris.com/farmer to sign up today and get started.
Hi, this is Ryan Koory, the Director of Economics with Mercaris, here to provide you your monthly organic commodity outlook update for the U.S. Starting off, looking at the U.S. production picture, there's not a lot in terms of updates relative to what we were talking about in the prior month. You know, over the past month, October and leading into November, we did see some areas that have experienced some early frost and some wet conditions. And in those areas, we have seen some slowdown in the pace of harvest. But overall, the pace of U.S. harvest remains well above what we were last month, and the overall crop condition looks pretty fantastic. Looking at those elements and looking at crop reports in general, we don't really see anything out there over the past month that's developed that's really going to change our expectation in terms of what harvested acres and the pace of harvest looks like. In general, we're still looking at a 2020 harvest that's looking really strong and particularly well ahead of what we were last year.
Now, Ryan, as we wrap up this year's harvest, is there any room left for risk as far as yield coming in? Is there any room that we could see any significant changes to the projections that are out there?
You know, looking at those risks, Brian, basically you're talking about either acres or yield. And when we talk about yield, we really, like I just said, looking at all the crop reports and looking at the crop condition out there and the pace of harvest, yield looks pretty locked in. I don't know that we're going to see any big shocks or surprise on that side. We're definitely looking at better yields, and in soybeans we're looking at really great yields. But overall, yields look pretty locked in. The one risk that kind of still remains out there, and this is a virtue of how the organic market operates and how the data is reported in, and that remains on the acreage side. One of the things that we rely on for understanding what organic acres look like, particularly when it comes to the addition of new organic operations, is organic certifications that get submitted to the USDA. And with those certifications, they do get filed as the year progresses, but the way the USDA collects those, they have essentially a January 1 hard deadline, or maybe it's January 2 hard deadline where those documents have to be submitted by. So oftentimes we don't have a full picture of how many new operations we have before we get to January 2. With that, that risk remains. We do expect to see more organic operations this year, and with the data that we've looked at so far, the data suggests that we're getting more new organic operations this year. We've tried to compensate in our expectations for how many more operations we think we'll get, but before all the data is in, you just truly don't know. So I do believe that the most salient risk from a U.S. supply perspective really remains in terms of the overall growth within U.S. organic production and just how many new operations we get this year and how many more acres we get harvested as a result. So looking at the picture for U.S. organic livestock, in a lot of ways, we're really not talking about anything that's surprisingly new relative to where we were last month. The pace of U.S. organic broiler slaughter remains slightly above where we were last year. We estimate that over the month of October, U.S. organic broiler slaughter reached about 4.7 million head, which is up a little bit from where we were last year. Organic egg layer inventories actually remained elevated. We saw a jump over the month of September. It jumped up to about 17.1 million head, and it seems to be remaining there in October, which puts egg layer inventories up about 6% year over year. And then looking at the pace of organic turkey slaughter, this is something we've been watching throughout this whole marketing year. Over the month of October rather, we saw organic turkey slaughter reach about 450,000 head, which puts us up, again, almost 250% year over year. And this is one of those things that we're trying to look at lots of different pieces of data. The USDA updated or provided an updated outlook in terms of its organic survey in October for 2019 numbers, and with that they provided some inventory numbers which reflect some growth within the industry, but nothing that really would suggest the level of growth we've seen. Also looking at the number of new certified organic operations, again, there's indicators of growth there, but not consistent with 250% year-over-year growth. So we know that we're seeing growth within the organic turkey industry. It's just a question of just how much that growth is and what that overall total level of production is. And then finally, looking at organic dairy, with August, we got an update to the organic fluid milk sales number provided by the USDA. And with that number, what that provides us is an understanding of just how much organic fluid milk has been sold to retail outlets within the United States. Over the month of August, we saw that number jump up to 232 million pounds, which is up about 5% year over year. And then over June and July, the preceding 2 months, we saw the level of organic retail fluid milk sales remain pretty close to that level, 237 million pounds in June and 240 million pounds in July. And even though those numbers aren't true organic milk production numbers within the United States with regard to how much is coming off of farms, they do indicate growth in consumer demand side for organic milk. And that growth is kind of consistent with what we would have expected to see based on a lot of anecdotal reports we heard earlier this year following the increase in retail demand following COVID-19. Really talking about that retail fluid milk number, we started to see it creep up around spring, and it's remained pretty elevated since then. Right now, we're talking about a level of retail fluid milk that we expect to end this 2020 calendar year up about 10% year over year. And that's pretty substantial considering the fact that if you look at that number over the past couple of years, it's been relatively flat since about 2017. And that flatness is reflective of, if you look at some of the overall dairy sales numbers released by the OTA. So if that 10% jump we're seeing in retail fluid milk sales this year is indicative of what's actually going on within consumer demand, it's a pretty positive picture.
Just to comment on fluid milk sales, as you mentioned, that's the consumer demand, and the flip side there is what's being supplied. And in the organic dairy industry for the last several years, it has been significantly oversupplied, and some companies have actually had to wind up dropping producers, or with that price pressure or that oversupply leading to price declines. Lots of farmers have left the industry. I don't know exact numbers, but just with low milk prices, farmers have gotten out. So that is a very good sign, and it's just a matter of how much demand, how much supply. Is supply and demand in balance now, or are companies still working through excess supply? And how sustainable is the higher consumer demand with COVID going on and stocking up? And it seems we're in the middle of another spike that could lead to more panic buying, which is a benefit to retail dairy customers. But yeah, there's a lot of indicators, positive indicators there for the dairy industry, but I think there's going to be still companies that are still a little bit gun shy.
Yeah, absolutely. And I do truly hope that over this year and over this next year, some of this increase in retail consumer demand will start to add some upward pressure on organic dairy prices and start to put more profitability back into organic producers' pockets. That would be fantastic to see. So moving on and talking about the U.S. organic import picture. Over the month of October, we saw organic corn imports, talking about organic whole and cracked corn. They mirror a little bit what we saw in September. Overall, we continue to see the pace of U.S. organic corn imports track below last year's level. Over the month of October, we saw imports reach about 24,000 metric tons, which is about 45% down from where we were last year. That's whole corn imports. And then cracked corn imports, they were mostly even with where we were last year. So overall, the pace of imports is down in October. Looking at where those imports are coming from and where we're seeing a decline, really over the month of October, it's a reduction in imports from India. One thing that we had been talking about earlier in terms of our expectation for this marketing year, we were looking for a slower pace of organic corn imports. And that's really coming off of the fact that we were looking at some pretty good acres to be coming off this year and decent yields. The U.S. supply picture just looks better. We were questioning just how much within that context we'd see Argentina continue to expand its exports to the U.S. and capture U.S. market share. And so far, over the first 2 months of this marketing year, it's been Argentina that's been a little bit of the laggard in terms of its pace of imports. It's keeping that number down. Really, when we look at where Argentina is now, you're talking about the first 2 months of a marketing year, so it's almost too early to really call the ball game, so to speak. But if we see this pace persist over another couple of months, this could lead us to further revising lower our import expectation for this marketing year. Next, looking at soybeans. Soybeans look a little bit similar to what we just talked about in organic corn. Basically, soybeans, we're seeing the pace of imports through October continue to kind of remain just a little bit below where we were last year. In October, we saw basically two trends that we had expected continue to persist. One is we saw a reduction in imports from India year over year, which is consistent with the trend that we've seen really since about 2017. And then another thing that we saw is a pretty substantial import of organic soybeans from the Black Sea region. Now, with those Black Sea region imports, one of the things that you have to keep in mind with that leading month of data, that October, is whenever we calculate those numbers, we calculate them by looking at bill of lading data. And that data is a little less transparent in terms of country of origin. Generally, we have to wait for the official trade statistics to be released before we fully understand what that country of origin number looks like. Now, with the Black Sea region imports, one thing that I'm speculating is that the actual country of origin is likely going to be Russia. And if that's the case, then that's consistent with the trend that we saw last year and something we were expecting to see this year, is a continue of the strong pace of imports from Russia in terms of soybeans. And it's likely we're seeing that again in October. So there's kind of two of the trends we were looking at emerging this year that we're starting to see the signs of. One that's a little bit of a surprise is the pace of imports from Argentina. And this kind of reflects what we were talking about in organic corn. So far, U.S. organic imports from Argentina are just remaining below where they were last year. One question that we walked into this marketing year, again, kind of reciting what I just said about organic corn, is just how much more can Argentina expand its footprint in the U.S. and take up U.S. market share? And so far, we really hadn't seen Argentina emerge strongly over the first 2 months. Now, taking all of that, with a grain of salt, you're talking about 2 months of a marketing year, and it's too early to really speculate too strongly. But it is surprising that we're not seeing that pace of imports escalate more quickly, particularly at the beginning of the marketing year, where Latin American imports tend to be the strongest. And then finally, looking at soybean meal. Organic soybean meals, frankly, it's kind of surprising us at the start of the marketing year. Organic soybean meal, as most folks know, runs on a slightly different marketing year than crops. You're talking about October, September marketing year. So October is really the beginning of the soybean meal marketing year. If we look at how September ended, basically what we saw was a substantial increase in imports from India over the month of September, which ended the last marketing year up year over year, which was pretty surprising. We were speculating whether that increase was due to further catch-up from earlier in the marketing year over the spring months, where we saw a slowdown in import activity, and we definitely saw that imports from India, or if something else was at play. And then over the month of October, basically we saw a repeat of the month of September. We were talking about a pace of imports that was up about 138% year over year over October, which is pretty striking. Now, with September and October both showing such strong import numbers relative to last year, it's one of those things that, you start to kind of question exactly what's driving these trends within the market and perhaps what implications it could have for the marketing year ahead. Is there something else at play that's driving that pace of imports, and can we expect to see imports remain so strong, particularly over the next several months? Or is this just further catch-up activity from last year? And with just essentially 1 month of the marketing year and 2 months of increased activity on the books, there's just not enough there really yet to read the tea leaves, so to speak. But they are definitely trends that are different than what we were previously anticipating. And so something we're going to keep an eye on. It's definitely worth watching from a supplier perspective for the U.S.
Well, I won't make you speculate on soybean meal and the short time span with the marketing year just starting, but as far as pace of imports on corn and soybeans slowing down, especially from Latin America, just not quite hitting the levels that we anticipated, what is that indicating?
You know, it's curious what it could be indicating, particularly whenever you think about organic corn. One of the things that we've talked about within the corn complex, comparing it particularly to soybeans, is the relationship between supply and price. And when you talk about corn, we do produce so much more of our supply domestically really compared to soybeans. You know, I believe soybeans, we still import something around 78% of our needs, where corn is down somewhere closer to 30. With corn prices sitting as low as they have over this past marketing year, and really at the start of this marketing year, potentially what we're talking about is some price competitiveness with those imports. Maybe we're starting to see a situation in which U.S. organic corn prices are low enough that it's pushing some imports out of the market. And, you know, that would be a little bit consistent with the fact that we're seeing prices starting to hit a little bit of the floor and those pace of imports slowing down relative to what we expected. Soybeans, you know, it's a little harder to call. I think, and this is another question because it is really Latin America we're talking about. We haven't heard anything that would indicate that there are substantial production issues or port issues with Argentina, because that's genuinely the country we're talking about here. But we are in a bit of an information vacuum. You know, we can only leverage some points from the conventional sector and assume they apply as much as they can to organic, but there's even less information about Argentina organic markets than there is about the U.S. So one thing that I do speculate is, you know, particularly with corn, maybe we are starting to see price pressure further push out imports. And if that's the case, we'll see the role of imports in U.S. organic corn markets fall over this next marketing year. But with soybeans, you know, it's a big question. Maybe with India picking up in soybean meal, maybe we're starting to see that trend ratchet back up where we're importing fewer soybeans again and more meal. Or maybe there's something else at play. And like you said, with just 2 months of the marketing year on the books, it's really hard to speculate or prognosticate too much about what's going to happen over the next 10 months. But these are definitely trends that aren't in line with what we had previously expected to see. And so they're definitely something that we're going to be keeping an eye on as we move forward. Finally, briefly wrapping up with a look at U.S. organic prices. Over the month of October, we've started to see a bit of a floor appear underneath of the markets, particularly for organic corn and organic wheat. Looking at the 2-week period ending November 7th, the Mercaris Market Price Survey recorded the average price for organic feed-grade corn delivered to U.S. Corn Belt elevators came in at $6.40 per bushel, which is pretty much even with the start of October. And then looking at the organic feed-grade wheat market, again, that 2-week period in November 7th for organic feed-grade wheat delivered to U.S. Corn Belt elevators, we saw that price come in at $6.40 per bushel. Again, mostly flat with the start of October and pretty much right alongside with organic corn. And then finally, turning to organic soybeans, we saw prices slip just a little bit over October. The price for soybeans delivered to that same U.S. organic Corn Belt elevator came in about $19.10 per bushel, the 2-week period ending November 7th, which is down about $1 from the start of October. But even with that being down about $1, it's at that bottom side of that range that we've really talked about this whole past, you know, since the start of 2020, as we've seen soybeans kind of bounce back and forth between $19 and $21 per bushel. It's down a little bit from that middle of the summer where we were seeing it closer to 21. And so with that, maybe we're talking about a little bit of harvest pressure, pushing those soybean prices down, but it's still not down substantially from this range we've been talking about all year.
Well, we've kind of mentioned it a couple of times in both the imports and here in prices, as far as just more of a general question on natural floors in especially the corn market. I know there's a lot of concern with the price being as low as it is, $6.40 for organic corn, that we're hitting that level that may be unprofitable for farmers. And do you see where, just generally here, that there is a natural floor on either corn or bean prices that it typically won't dip below without major issues popping up.
Yeah, with soybeans, one of those issues that we've talked about there is so much of that price is really being driven by foreign markets still and the supply of imports, just because so much of our supply is from foreign markets. And so, I think it's good that we've seen prices remain pretty stable over the past year, particularly considering the fact that we've seen grain markets struggle so much. But, it's hard to say exactly what the pressure could be on soybeans, particularly with the risk of more acres and, with imports being a little bit off pace from what we expected. But coming back around to corn and wheat, I think that there is room for some optimism in terms of a floor. If you take some of your supply and demand factors that we're looking at and the risks around them, if you look at, the amount of corn that's being held in silos right now, we know it's definitely down from where it was at the start of the last marketing year. If we look at the pace of imports, it's coming in below what we had expected so far this marketing year. And if we look at the pace of feed demand, it looks like it's remaining pretty robust. And so those three factors right there all suggest that, there is room for this market to be getting a floor underneath of it, some support for prices. Now, in terms of risk going the other way, and as you alluded to, we have kind of danced around this point already, we still don't know what that final harvest number looks like. It really does matter just how many more acres we bring on this year and what that final production number looks like, because that will be a critical factor in prices. That said, we're already into November, and a good portion of the U.S. harvest has already been completed. And with that, we really haven't seen substantial harvest pressure on prices. And so maybe we're not seeing a harvest that's ratcheting up substantially beyond our previous expectations. And we are starting to see a market that's getting a floor. And I certainly hope so. I mean, it's, as you said, it's getting to be one of those points where it is getting challenging for organic farmers in terms of profitability. And so it is good to see some of these other factors kicking in to suggest that we could be hitting a floor and offering a little bit of support to those prices.
Yeah, I certainly hope so as well, and it's something that we'll be keeping an eye on in future months. So thanks a lot, Ryan, for jumping on this week, and really appreciate the information.
Absolutely, Brian.
Thanks for listening to Back to the Roots podcast.